Hello, everyone, and Happy New Year. Welcome to a new episode of Merrill's Monday Morning Market Madness. Just barely got it out on time, 11:45. So sorry for cutting it so close there on the morning part of the Market Madness. But either way, I've got some really, really interesting information coming at you today, and I'm going to make a bold prediction for what we're going to see in the housing market in the Phoenix metro area for the year 2021. But let's start with a recap of a couple of important numbers. So currently in our market, in our entire MLS, there are only 6,007 active listings. That is the lowest we have ever seen. By tomorrow or at some point today, we will drop into the 5,000 range. I mean, we have been in a seller's market since we had around 20,000 active listings. So anything, to 20,000 and under, it has been a seller's market. And we've been seeing home values increase for the past 10 years. And, a lot of people kind of feel like, well, the prices seem to be getting high. But as long as inventory is this low and demand is this high, it just becomes a question of supply and demand. There is nothing available for sale compared to the number of buyers who are buying. And it is dire. You guys are probably sick and tired of hearing real estate agents talk about our inventory problem, but it's literally desperate, dire. Pending right now, and I remember last year making a big deal about, I don't remember what month it was, but it was probably March or April last year. We made a big deal about the fact that we crossed a threshold where there were actually more pending listings than there were active listings. Now we have about twice as many pending listings as we have active listings. 10,380 homes that are pending. 8,203 have closed in the past 30 days. That number is a little bit low, primarily because no homes have been able to close for like the last 4 days because of New Year's Day was on a Friday. And then, of course, nothing ever closes on a Saturday or a Sunday. And then, of course, nothing has closed yet today on Monday. Or if it has, it hasn't been reported in the MLS yet. So by tomorrow, we'll see that closed 30 number start to go up a little bit. So right now, month supply of inventory of 0.73. But on January 1st, right after we had just had all those closings on December 31st, the month supply of inventory number had actually dropped all the way to like a 0.63. And that's for our entire market, all properties, $1 million homes, manufactured homes, everything. We were down to a 0.63. Now, the really, really remarkable statistic was that for the month of December, we saw 9,997 closings. Come on, you guys couldn't give me three more? Because someone out there couldn't have got me three more closings so we could hit 10,000. But the point is, that is the second biggest month for closings that we had all year. Only July had more closings than December. I mean, that just goes to show you how high the demand is. The demand is right now. It's ridiculous. 10,000 closings in a December. Your typical December has around 7,000 closings. So we were up, over 30% more closings than normal with next to nothing for sale. I mean, it's just very, very, very high demand, extremely low supply. Last year, which was a monumental year, 2019, I'm sorry, so a year and a half ago, a year and a month ago, there were 7,791 closings. And we were talking about what a huge year that was. The year before that, 2018, again, this was still a seller's market. 6,460 closings. The year before that, 7,196. The year before that, 7,126. So again, around 7,000 closings normal. We hit 10,000 this year. A huge part of what's fueling the market right now is, of course, the very low interest rates. Most borrowers are able to get an interest rate in the 2s. And so that's really improving affordability. Perhaps we'll see a reversal of the market when interest rates go back up. But everything that I'm hearing, everything that I'm studying, all the talk that I'm hearing is rates are not going back up anytime soon. So we are going to be on this ride for a while, and at least for all of 2021. We are not going to see a turnaround in this market. But here's the thing, maybe 6,007, that's how many active listings we have right now. Maybe that number still feels like a lot. Like, to me, it's okay, whatever the population of the Phoenix metro area is, 5 to 6 million people or something like that. Only 6,000 properties for sale is a ridiculously low number. But here's the thing, a lot of those properties are, not your typical home. So I had to look how many of those 6,000 homes are, single family homes, between 300 and 600,000. So kind of your normal price range, only 1,407. And then guess how many of those have pools? Only 303. Guess how many single family homes between 300 and 600,000 with a pool sold in the month of December alone? 1,468. That means that we have a month supply of inventory for that type of home. You kind of your typical, single family home that a lot of people kind of want a pool. Month supply of inventory on that of 0.21. In other words, less than a week. 6-day supply of inventory for your typical home right now. So that's why we're saying it's very, very desperately, direly low inventory right now. Now, I told you at the beginning of the show, I told you I was gonna make a bold prediction. So here it goes. Right now in our MLS, the average sales price is $419,000. That was up 18% year over year. Okay. The median, however, so the average is an interesting number, but perhaps not the best number to look at because it can get thrown off by, a few very, very expensive homes getting sold. The median sales price, which I think is possibly a little bit better number to look at for kind of understanding like what's in the middle, like what's kind of your typical home, I guess. The typical sales price was $331,000, which was up 17%. So we saw median and average sales price increases of 17 to 18% in the year of 2019. I am going on record now. You can take me to the I don't know what's a good phrase. I can't think of a phrase, but put it down. Merrill predicted. You can come give me crap about it if it ends up not being true. I am predicting an increase in the median sales price in the year 2021 of 20% or more. I don't see how it's possible that it doesn't go up at least that much. I'm seeing a lot of like kind of expert economist predictions much, much lower than that. But I also saw a lot of expert economist predictions predicting 3% for this year. So, and then when COVID hit, oh my God, it's going to go down or it's going to stay flat. And we still saw a 17 and 18% increases. So with no inventory, super low interest rates, super high demand, 20% increases this year. So if you're waiting for the market to go down or you're waiting for the right time to buy, you need to get in now, because if you don't get in now, it's going to go up another 20% this year. And let's face it, like this is the most important point that I try making to people. Most buyers that I work with anyway are not paying cash, right? They're getting a loan. So you're not particularly concerned necessarily. I mean, no one wants to overspend, but you're not particularly concerned with how much you're actually spending on the house. You care what the monthly payment is. If you go out and buy a car, you don't want to overspend on the car, but you want to make sure you can afford that monthly payment. When you're buying a house, buyers want to make sure that the monthly payment is something that they can afford. If rates go up and that causes prices to come down, your monthly payment will likely still be higher, even at the new lower price, because you're getting a higher interest rate for it. And so there has never been such an incredible opportunity to lock in a super low payment and keep that fixed for 30 years. Even if the value of the property goes down, you've got an incredibly affordable payment that you will likely never have an opportunity to get ever again. I think you should jump on that. And if you're considering investing in real estate, it's hard to not cash flow on properties right now because the interest rates are so low. You can buy it and rent it and just get incredible cash flow. I'm not making this episode all about investing, but recently Christy and I have bought several investment properties that even after our payment on it and the taxes and the insurance and the HOA and the management fees, we're still cash flowing $500, $600, $700 a month on each property just because the rates are so low. So even if you think prices are a little high, I'm putting my money where my mouth is and I'm buying as much as I can right now. And I think that you should too. So I hope you found this information helpful. Can't wait to find out whether my 20% prediction comes true. You guys might take me to the cleaners on that. We'll see what happens, but I'm quite certain, quite confident that is going to be the case. Anyway, Happy New Year, and I'll talk to y'all soon.